Hello, traders. Welcome to another part of the training series of Bad Parks. Today we are going to learn one of the vital skills that every trader should know to correctly and accurately recognize the change of character in the market. This situation is not just a stage of analysis, but the first and most important step in which you have to master the method completely so that you can smooth your voice to reach a good voice and become a verbal trader. If you do not understand this concept correctly, you will most likely get stuck in this advanced part of the market many times. We are going to get acquainted with the types of smooth change, check the trading strategies related to it, and also take a look at the para-sections that may happen in this market. But this is all we are going to do. So if you are looking for this kind of content, be sure to like this video to support us, and if you are new to our channel, don't forget to subscribe. So, let's go to the point of the matter. What does it mean to change the trend or to change the character? A trend change happens when the strength of the dominant market trend weakens and signs of a change in the direction of the market structure and the flow of orders appear over time. This first pattern is a signal that tells the same that the dominant trend may change, that is, the control of the market may be transferred from buyers to sellers or to LEX. Now let's see how we can recognize a valid trend change in the market. In the bearish scenario, the smooth change is formed when the price breaks the previous major structural low or floor as well as the recent bullish zone and closes below it. The same structure also applies in the Saudi state. In the example we have, the price is in a Saudi trend and has continuously broken the Saudi structures one by one. But when the price comes and breaks the recent structural floor and the related tension zone, we weaken the first signal of trend change. From there, the downward pressure will continue and the price of the next tag SI area will reject its higher levi, which is a sign of the change of the trend and the rotation of the market. As a result of the second smooth change, now we can say with more confidence that the overall structure of the market is undergoing a serious change. This is where we can expect the price to enter the downward order flow phase. A very important point should be considered here. Every time an important area is destroyed or broken, a new area is automatically formed in the opposite direction. Since the price has broken several zones at the end of the movement of a supply zone in the extreme zone, we expect the price to move up to that supply zone. If the price reacts to this area, we can enter the market by opening a push position. We expect that the price will continue to fall and record new downward failures in the market structure. If we look at the chart, we can see that after the price reached the Oxram zone, which was related to the wave of trend change, and it became a tag, it immediately returned and fell, breaking a new floor with strength and closing below it. After that, it had a small correction, it went back up again, it didn't react to the width and then it continued its downward movement and broke the structure for the second time. As is characteristic of the general structure of the market, which was previously Saudi, after the formation of the pattern of change, Rwanda has completely entered a downward phase. So changing the trend means turning the whole market, either from downwards to Saudi Arabia or from Saudi Arabia to downwards. Let's examine another scenario again. Let's assume that the market structure is such that the price has changed the trend by breaking and closing above an important low. In addition to that, we see that the price has crossed a currency zone, and the remarkable thing is that it has not left any uncorrected currency zone behind. It means that all the volatility of the previous currency has been completely mitigated before this move, so when the price breaks the last currency zone, it is actually creating a new volatility zone. As we said before, whenever a zone is not broken, a new zone is formed in the opposite direction, so a new and thirsty gas zone is formed in the open Ziram zone. Taking this into consideration, entering into a purchase transaction from this region is a nettle of the region and with a high probability of success. There is a high possibility that the price will return to this area again, show it with action and then change its direction upwards. This expectation is confirmed by the previous Shaqiri of Chanjaf, Saudi Arabia, which indicates a change in the direction of the market structure. So, in this situation, the price has a very good opportunity to correct to the final direction of the new price that we made, activate our pending purchase order, and then continue with its Saudi trend. Well, now let's go to an important and key part, i.e. the criteria and rules that must be written so that we can recognize the good and sufficient characters in the games and use them to our advantage. And let's get to the first important measure to detect a valid change of character mitigation in a higher time frame. A change-off pattern is valid only when the price had started to return before the main structure was broken and the smooth change started from a supply or supply zone in a higher time frame. If the price can reach these areas only with a valid candlestick pattern, we cannot consider it a valid trend change. This is a very important point that we should pay special attention to, because it helps you better recognize the turning points with the high probability of your situation. This also helps you not to get caught in market traps, especially those that are created due to the change of false trends and you have to trade in the wrong direction. For example, let's assume that the market structure is declining and the producers are holding the counter. Now, in the next scenario, we see that the price starts moving upwards. In appearance, we get a small reaction from the last supply area. But then the price broke that area and will pass through it if necessary. Here we are facing a repeated scenario that happens a lot in the market. Many new readers who have not yet understood the structure of the market correctly consider this profit move as a cricket scam. It means a signal to estimate the market limit. They think that the downward phase is over and now is the time to open a buying position with the new Gaza region. They usually place their stables right under this newly formed Gaza area, but contrary to their expectations, the price of moving to Saudi Arabia is small. Nahye touches the upper supply and then they go again. Nazuli continues on his own. The result is that the supply of traders that have already been bought is hit. What many people don't understand is why the price acted like this and their profits were destroyed. Unfortunately, this is not the case. You should not enter a buying position at all until the price reaches a major resistance zone. The thing called Chenjak was not a valid Rwandan change, the price just made a Saudi move to touch the higher level. Finally, those currencies have only played the role of an inducement zone so that the price can gain more energy by accumulating liquidity and continue its downward trend with greater strength. This scenario shows well that if you do not understand the market structure correctly, it can easily cause damage. If traders had more experience or better understanding of emotions, they could have avoided this trap. They would have realized later that what was considered as a cricket change-off was not a good idea. Because the price had not yet reached the Gaza region of the higher time form. Now let's go to another one of the important measures and alignments that can help us to better identify characters with a higher probability of success. One of these measures is liquidity sweep, which can give us more preparation for the correct diagnosis of change of character, indicating a possible change in the stock exchange market. To get this confirmation, we have to hold it until the price comes and creates a series of static liquidity. It is close to the areas we want in higher levels. In the previous parts, we talked completely about the types of static liquidity models. If you haven't seen those videos yet, I highly recommend you to watch them because a deep understanding of these concepts can give you a much better view of the price movement, but let's have a quick review here. As you know, static liquidity is called a special form of the chart where a large amount of money is collected there, such as stable orders and sell or buy orders that are waiting to be activated. These areas can be seen in different parts of the four, but the most important and most used modes are the ones that we see time and time again in the market. Like equal peaks, equal lows, and also dynamic thin lines, they have different categories, such as double bottom, double top, triple bottom, triple top. and also the limits of the dynamic trend, both downward and Saudi. Now suppose that we have a structure like this on the 15-minute time frame. The price is in a downward trend. After reaching the last verse of the width, it spends a series of downward bios. The price showed a reaction and returned, and in this return, a new supply pipe was made, which has not yet been sold, and is waiting for the price to reach it again. Now the price is moving upwards. If we go to a lower time frame, for example, we zoom in on the time frame for 1 minute, we will see that the price is making a series of higher highs and higher lows until it reaches the price zone that we specified in the time frame of 10 minutes. Just before it reaches this area and just below the same area, the price will make a series of equal peaks and a double swing will be formed. Where the excessive amount of liquidity has accumulated, just close to our target area in the top 10 frame, what will happen next? The price comes and sweeps the liquidity accumulated above a double tap. When the price of the time frame enters, it rises, touches it, and then changes its direction and returns to the bottom, and then a cricket chanjack is formed because the price rises and he will break, and below it, if necessary, it will be lower than the previous level. Finally, the price will break the demand line that was created due to the previous break-off structure. As we said before, whenever a region is hostile, a region automatically doubts in the opposite direction, so now that the price has come and the region has broken the previous Saudi tension, a new width zone has been formed here, which is related to the downward wave that started with the change of character. Here we have exactly the same total that was needed to find an effective pattern of change of character, a pattern that has a high probability of success. The price came, first of all, the value of the region touched the higher time frame, then a liquidity sweep happened in the current time frame, and finally, a bullish trend was formed. In the next quarter, we can place a sell limit order below the new price point and set the stoppages a few pips higher than the same point. We have two options for tick profit. Either we can set it on a higher time frame, or we can target it on the last high swing in the active time frame. It is very important to be able to identify a liquidity swap before the price reaches the target area, because this ergo verifies the power of the region or our greed. We use liquidity sweeps as a confirmation tool. As a result, if the price hits the price zone and the time frame demand is higher, I can collect liquidity and then show a return of the price in lower orders and create a change of character pattern. There is a very high probability that the price will move in the opposite direction of the new Chanjab Gractor algo and cause the traders who enter the market in the hope that the price will change its original direction to become active. Now, let's move on to the next method, which is the double zone breakout. In order for the water change pattern to be more effective and to have a higher chance of success, the price must break two consecutive price zones or highs, and above or below that Klaus Kahneman. For example, in this scenario, if the price breaks this Gaza region, then a double zone breakout has occurred because the price has crossed two Gaza regions in a row with a downward movement. Music. This argon can be a strong confirmation to enter the market either by opening selling positions in a downward trend or buying in the Saudi trend. It fills the two tracheas and closes below both of them without completely filling this cavity on its way. After the double zone breakout, this creates a strong limit, after which a new and strong supply zone is formed in the extreme zone. In this case, we can place a trip of 3 limits in extremes to Gaza region, because the price is very likely to go back down and fill this remaining efficiency. Do the orders, enter the word Berlock, fold the widths, and then move down, using the concept. In your transactions, it can increase your confidence in trading and make you more confident about your transactions. Now let's check another scenario of double zone barricade, which may be a target in the market. Once again we have the same scenario with a small difference. The price could not cross the second zone with a downward trend. We can see that the price passed through the last level of Tagaza and created the level of the currency and the level of XRIM, then the price had a time stop and money back, but it could not reach the level. The price of XRIM will rise, first by creating a double swing, a liquidity will be created, after that the price will move down and break the next wave. Since the tube is broken, a new opposite side zone is created, which is the same as the tube of width, as mentioned before. The upper currency zone is the XRIM zone and the second currency zone is one below, you call it design zone. Please note that we cannot trade on the basis of the discordant exchange rate because there is a very high possibility that the price will move higher for liquidity gathering and stable traders who are on. If you were to enter the market from the discretionary currency area, there is a high possibility that the price will rise to crown the extreme zone, as well as accumulated liquidity. It will sweep. If you had a transaction here, you will be one of the same liquidity. What we have to do is to wait until the price of liquidity accumulated in the market sweeps the price, and then we can enter the market. Thank you for watching the video. I hope it was useful and informative. Don't forget to hit the subscribe button and turn on the notifications to receive our latest videos. Thank you for your feedback and suggestions. Please write your observations in the comments and tell us, friends, to cover some topics in our future videos. We appreciate your support and we look forward to seeing you in the next videos.